Hello, welcome. Let's go over a lot of little markets action that's happening right now. I think you're going to be excited about, especially as we review where we are with this week's report and what we were coming into the week expecting. And also, I think you'll find some good insights, some trade opportunities as we get into a few stock setups that we've gotten some indications on from our radar screen. So first and foremost, we want to point out an old tool that we use. This actually is a chart from a fabulous software charting program we use, Genesis Trade Navigator. This is the McClellan Oscillator, an old tool we've been using for decades. Funny thing is I think I actually even gave this exact some of these setups, zero line rejects, convergence patterns, in a book I wrote called Mastering the Stock Market, which was published in late 2011 or 2012. I just don't know where the time flies. But what we see here on this chart is a person's pivots, and then this is a line chart looking at the S&P 500 with the McClellan Oscillator. We look at overbought and oversold techniques as well as a zero line. Coming into this week, we were going from oversold to the zero line. Now, typically what we want to see is at least a 2-day close greater than the zero line. We get a zero line cross. Otherwise, if it comes back down, we get what's called a zero line reject. And that zero line reject is exactly what we have. Now, if I'm looking for the market to go down, then why the heck would I be talking about and putting videos out looking at watch the Russell, which looks posed to outperform the broad market? Well, first and foremost, you'll look at this chart and you'll see the top row has the top 5 stock indices, the bottom row on a daily basis. The bottom is the same charts but using a weekly higher degree time frame. So these are daily charts and these are weekly charts. If you take a look at the breadth of the market, now the neat thing here is we had Genesis create and add these advanced decline comparative ratio lines for the Spider, for the Qs, and for the Russell. They had the Dow and they had the NYSE, and when I asked the programmer at the time, could he add that? He goes, well, why? And I said, because I'm not trading the NYSE. I'm trading the S&Ps, and I'm trading the Qs, and I'm trading the small cap. And so that made sense. And because they were able to, and they have the data, they were able to put that in their system. So very a great company to work with. Been dealing with Genesis Trade Navigator now for probably 2 decades. Here's the bottom line that you're going to be interested in. Why have I been talking about the Russell to look to outperform relative to the broad-based blue chip markets and of course technology? Well, first off, the decline was on greater volume. The decline was on less volume. The relationship of where we are with the breadth of the market and the small cap, we seem to have had a little bit better support. We've actually taken out old lows, as you can see. We're trading against that support in the Russell. So the Russell's a little stronger. So therefore, if the market does break out, and you can see this line, might be hard to really focus in on, but if the March, and I'll put this date in, the high of 323, if we close greater than the high of 323, and that's what that line in the sand is, then I'm looking for a close greater than the high back on March 23rd. So if the daily chart closes greater than that high, then we stand a very strong chance of seeing not just a test of the highs, but potentially new highs. We're going to be watching the condition of the market because the breadth of the market, the advanced decline on the Russell, and the volume is posed for the market to outperform. Now, let's look at this next function here or feature, which is, of course, seasonality. And as you can see, the seasonality is a lot stronger this time of year or right now as we head into April for the small cap. So we do get a little bit more bounce. So technically speaking, the Russell's outperforming. And that's why I've been kind of promoting more of the small cap Russell relative to the other markets. As you scroll down, here's another little thing that we cover in our research, and that is, while we've not been in fact, we've been positioned for the last few weeks, and one of the things that I'll share with you is we've been talking about dumping or looking at long SQQQ, which is the inverse ETF, and QID. So we've been bearish on the NASDAQ 100. We've also been bearish on the semiconductors. We've taken several positions like the long inverse ETF on SOXS, which is the inverse ETF. So when the semis go down, the SOX goes up, right? Also, we've been looking at, we put out two distinct option strategies, vertical put spread and SMH, using the April 20th expiration 110 strike price put, being long that, and short the 105. Now that trade we've come out of and profited from. The next strategy, we did a diagonal calendar spread where we used the April 20th expiration, sold the 99 put, used that money to help finance a longer duration May 20th 101 put. So we were in the upper end 101 long with more duration, and short the deeper out of the money, shorter duration option to collect premium to help reduce our cost expenditure on that strategy, being able to participate in the market for a downside and be in a sweet spot between those two zones of 99 and 101. So that seems to be working fairly nicely. Those are the kind of strategies that we like to put out when we have really strong signals. So our focus has been not necessarily the stock market is getting ready to be in the biggest crash, but yet we seem to have more of a rotational grind in the market, out of tech and into a few things. And we had this particular week a lot of, and I'll scroll down here so you could just see this in print. What we really were looking for is, for this particular week, we had a lot of different sell signals in technology. We had a lot of sell signals in different markets, McDonald's, Disney, Baxter. I mean, it was all over the board. And our video report shared more of those names and sectors. But the good news, and this is very important, and this is where it pertains to you more than likely from today, Wednesday, April 4th, moving forward into next week, is that we've seen technical strength and improvement in transportation sector stocks, consumer staples, and one, now don't think I'm joking here, but one of the best canned chili gourmet products ever is produced by Hormel. I don't know if you ever had Hormel chili, but it's not really that bad. But HRL was up nearly 6% today. So consumer staples, retail apparel, some energy, and some drug and biopharma tech stocks are starting to see improvement in their technical strength. Now, define technical. One is the PMC indicator. We look for relative strength improvement, and the other is volume analysis, and we're looking for markets that have been punished to the downside. We're looking for accumulation, and that's what I'm referring to as far as technical strength. So let's take a look at a few names that I think you're going to want to look at here. First off, I talked the other day about Facebook and why we're looking for Facebook, and it's set up to break out. Now, there's two things I want to talk about Facebook. First and foremost, Facebook generated a very ugly PPS sell signal on a monthly chart. It broke support, it closed below it, it opens the door for testing last month's or last quarter's low. So there is first and foremost. But since the moving averages are up there and we're down here against this next support level, I'm looking for a short-term pop in the upside. So there's two ways to trade this. Short-term swing traders look for short-term upside. That's one way. The second way is for long-term traders just to hang back and wait for the market to snap back to the moving averages and sell it and look for a more meaningful downsize move as we head maybe into the end of the second quarter, into the beginning of the third quarter, which is always typically bad for stocks, July, August, September, right? As perhaps Facebook gets back into maybe kissing into that XOXO level of the old high that we saw back in late 16. So that's the idea. Why would I even, if I'm bearish to market, why wouldn't I get short? Because the market on a 60-minute, and I'll share with you what's going on here. First, we've had this nice volume upside. We had this improved relative strength reading. This is a 60-minute chart, a hammer formation, an equal and opposite over there, equal and opposite there. So either we're going to go down and just continue to move lower. So I'm not long this stock. What I'm suggesting is if it closes greater than this, what we define as a last conditional change. Look at the gray line here. Look at the gray line here. We need to close, and X means close, on a 60-minute basis. If we close greater than that, it is my at least concept that we could at least go back and test where we started this breakdown from 321, the 21st of March, right? And as we went down, we've had sideways. If we close back up, we're going back up to testing maybe 170. So we have a setup but not a trigger. So short term, yes, we could see the very strong possibility that we break out. Now, I know Mark Zuckerberg on April 4/11 is going to be in front of testifying on Capitol Hill. That ought to be a fun time for him. I think he'll handle it, but needless to say, this stock could just sit for a while. So why buy something that's not in a momentum mode? A momentum mode is when it clears resistance on a closing basis with improved technicals, and you stand a better chance of success on that breakout. So a weekly option strategy, a directional long call would be the play in a situation like that. All right, now let's take a look at some names that popped up in what we discussed in our room yesterday and the reason why. We had one of my very formidable, well-published proprietary signals, the high close doji. Now, you see this gray line in the sand right there? The market closed greater than that gray line and generated a high close doji. So all of a sudden, here's Under Armour shooting up today. But it's not just that gray line. It's a very similar pattern. In other words, we look for the market to close greater than that gray line, right? Improved relative strength with improved volume, and therefore, boom, launch. Very nice setup, and that was one of the trades that we had set up for our trading community in the room from Tuesday's analysis. So coming into today, it was even nice because it was actually unchanged, a little lower at the beginning of the day, and then soared nearly up $1. So nice trade on Under Armour. Well, what led us to that was also, if you notice here, the relative strength was improving over the weekly, and so is the volume. So the volume very positive, and the longer-term weekly was very positive. It had a breakout, it had a shallow pullback, and the daily went in the direction of the weekly time frames. Why do I share that with you? Because it's kind of the same setup that happened with Facebook. Now, I can't promise we're going to have the same results, but the same setup. So let's take a look at CELG, and I know this is a kind of an ugly stock because it's done nothing but go down. But look at this, and I want to give you the very similar situation. See that resistance level? If this market closes greater than that level, we have improved relative strength, improved volume, and if we get that close greater than that resistance, then we should see a liftoff. So you want to watch for closes in CELG greater than 90.68. Now, if we're wrong, obviously, sometimes not all trades. Here's a situation. We had a great little move. It broke out at last conditional change, but the relative strength wasn't improved, and the volume wasn't looking all that great. So the key is we need a breakout of resistance on improved relative strength and improved volume. So now we have a stronger setup right now happening in both the RS or PMC indicator as well as the volume. And that's what we're looking for. The trigger would be a close over that line in the sand. So that's why I'm saying this would be important for you to watch for the next few days. So we have some really good setups in CELG. Michael Kors, by the way. And let's take a look at Michael Kors, because Michael Kors, K-O-R-S is the symbol. I mean, the only thing kind of missing here is a lack of that positive volume reading, but the relative strength certainly looks good. High close doji, and yet we need a close, and today we just might get that follow through, close greater than that last conditional change, and then Michael Kors could see some upside. Risk on the trade, obviously, when it closes greater, you can place your stop underneath the swing low or look for a directional trade in the next week to 10 days for some upside. And my guess is that it's a very strong tendency for markets. If this is to be a simple trading range, then it makes sense that if it breaks out, you're risking a stop underneath the low that it's established, and you're looking for a test of the upside in resistance on Michael Kors. But we have a lot of names that are showing up the same characteristics. Now, this is Twitter. And Twitter, if we go and we take a look at Twitter, compare that to Facebook, what's really intriguing about Twitter is a bunch of things, right? The volume action looks superb. The relative strength is showing as price made lower lows, the relative strength made higher lows. So we have a potential convergence. But you're going to say, but it's probably not over that resistance level, and you'd be right. So this is a 60-minute chart. We haven't cleared resistance. So if we can clear resistance and close above that line in the sand, then I think we have a good shot at Twitter moving sharply higher. Here's the neat thing about Twitter. There's this gap, as we drew in weeks ago, wide enough to let a semi-trailer drive through, right? So now the market's come back and it's filled the gap. The gap's been filled. It's in a downtrend. The relative strength stinks. The volume stinks. Or does it? Well, let's take a look. The volume right now, actually, the lower prices have gone recently. The momentum of the volume is picking up. Again, this is a proprietary volume indicator on my lifetime package with TradeStation. What's happening is it's sharing with us that as low as the market goes, it's on lighter volume. So if we can get a short-term 60-minute breakout, if we can get the daily relative strength to go fire off and start to improve, we also have a very nice setup in Twitter coming in the next week to 10 days. So I want you guys to focus on watching for breakouts or upside in Twitter as well. All right, so we had one we were looking at TripAdvisor. TripAdvisor here, beaten with an ugly stick. I guess if you want to say define beaten with an ugly stick. Well, in 16, the stock was at 80, and now it's trading down here at 40. So that's kind of an ugly stick. The relative strength, as the stock's not really done a whole lot, the weekly relative strength's improving. The momentum of the volume's fallen off a little bit. But look, we're trapped in a trading range. This is what the stock is doing. Here's the trading range. Gray line up here. White line down here. Gray line is resistance. White line is support. So we want to turn to the weekly relative strengths improving. We just don't have strong daily signals yet. So what do you think we want to watch for? Wow, coincidentally, we have this gray line in the sand right here, and you can see it. If we close greater than 42, it is my supposition that the daily buy signal or breakout will be in concert with the directional trend of the higher time frame weeklies. So there's just some food for thought. If we're looking for bad news to avoid bad news, well, there it is. Ralph Lauren, which we picked up. Again, why would I even buy Ralph Lauren since it doesn't look that great? Well, it did. What happened is on last week, it generated a PPS buy signal. The relative strength is improved, and then we were looking at the sector rotation into retail apparel. We felt that the dynamics of the technicals were really looking impressive. And so when we saw the longer term weekly, and it's the same thing. I'm thinking we're going to be at the very least capable of seeing 115. So being long at an average of 108, not a bad trade in a trading range when the relative strength is outperforming and we have improved volume. So there's some of the proof from a technical perspective that we are seeing a sector rotational grind, and it's not just an official bear market. I hope this video helped you out, at least what we're looking for. How do we define buy and sell signals with both our radar screen as well as our signals that we've published for decades? So again, thank you very much. And by the way, let's take a quick gander here. Last but not least, are we generating with today's price action any fresh new buy signals? Here's a high close doji, and if we take a look at it, you'll notice I think I hit the wrong line. Excuse me. Hard to see. Labu. Okay, so what is Labu? Interestingly enough, it is a 3-time bullish ETF on biotech. Wow. So we're looking at a potential buy setup. Now, the relative strength's pretty bad. The volume's not all that great, so it's not it's not in an indicator perfect world. What would turn this around? Well, if we generate a buy signal, we get above those moving averages, and we see more stocks in the biotech sector start to lift up and generate buy signals like CELG, then it would be time to look for Labu. So there you have it. Thank you all for watching, and I hope you found this both informative and educational. And last but not least, and this is last but not least, I'll share this with you on Thinkorswim platform real quick. In prior videos, I've shared how to populate. It's real easy to go to Studies, look for my name, John Person, and there's 3 indicators. Person's pivots, the PPS, which is the buy and sell arrow, and then PMC, and that's what this indicator is. And as you can see, this is CELG on a weekly chart, and it looks very similar to what I've just shared with you. And you can see fuchsia, that pink color, shows that as a market goes from relative strength weakness, it says stay out. As the relative strength starts to improve, it starts to show there's a stage happening. We go from relative weakness to lagging to market improving. So on a weekly basis, CELG is actually starting to, which is kind of ironic because here's the daily chart looking a little bit better, and you can see that it's been in a buy and it's having a follow through. There's your doji type of pattern right there. So if we clear that area with improved relative strength, CELG might be, while everyone's looking at Amazon demise and things like that, and looking at the whole China embargo or trade war kind of situation. Meanwhile, the money is still moving in our markets, and we're seeing the rotation while no one's really focusing on it. But our indicators are picking this up, and I hope you benefit from that information. Thank you very much.